Alright, hello everyone, here's your lesson on sequential SMT, also known as Ssmt. This video is the first of 3 videos. The other 2 videos are going to be on the other variations of sequential SMT. You have to watch this one first in order to understand the other 2. Now, before we actually get on to what it is, we have to first understand time frame alignment, significant highs and lows, both of which are in videos prior to this one on the watt, so go make sure you've already watched those before you are watching this one. Additionally, you have to, I guess not have to, but if you want to fully understand the logic of QT, how the quarters work, why they work, go watch the Day QT YouTube video, the free one. Alongside that, his interview with Words of Wisdom. Additionally, and goes without saying, you should have already had a basic understanding of ICT, and more specifically, a basic understanding of SMT, the foundational version of it. You should have watched that and understand that before we move on to the rest of this video. So, what is sequential SMT? Sequential SMT is SMT between 2 quarters of a cycle, such as a 90-minute cycle, daily cycle, weekly cycle, monthly cycle, and so on. It is the SMT with back-to-back quarters. So Q4 SMT with Q3, Q3 SMT with Q2, Q2 SMT with Q1, and then our new quarter, at the start of the new quarter, it would be Q1 SMT with Q4. It wouldn't be Q4 all the way to the previous Q1, it would be Q4 to the new Q1. So hopefully that makes sense. The story made short, the aim of sequential SMT is to anticipate a reversal of specific quarters. To put it simple, this is the only type of SMT that actually holds. Now, you're going to see regular SMT. What is the use of regular SMT? Regular SMT, as described in the significant highs and lows video, is simply engineered liquidity. We can anticipate those to be invalidated, disrespected. So, sequential SMT looks like this. The SMT between the Q3 high with the Q2 high. As you can see, asset 1 ES puts in a failure swing during Q3, failing to run out the Q2 high, while asset 2 and 3 and Q and YM during Q3, both of them run out the Q2 high. That gives us sequential SMT, and from there we can anticipate price to head lower. Now obviously that has to be in line with what I'm going to talk about here, and that is high time frame narrative. Biggest aspect of understanding sequential SMT, because you guys are going to think sequential SMT is going to be found at every single reversal, or more like sequential SMT is going to cause every single reversal every single time it forms. That is not the case. Narrative, higher time frame narrative, and higher time frame market structure will forever triumph SMT. What that means is the overall sentiment of your higher time frame market structure will determine which SMTs we can consider weak and which ones we can consider strong. What that means is here, if we're within the buy side of the curve of a market maker buy model, that means every single bearish sequential SMT that we form within the buy side of the curve, that is weak. Perhaps it could cause a short-term retracement, such as what we will see here, but it is not going to cause a reversal. We should anticipate every single bearish one that forms to be invalidated, and that we can classify as weak. Now, the opposite for strong ones, every single bullish sequential SMT that forms within the buy side of the curve of a market maker buy model, we can consider strong. Now, vice versa for the sell side of the curve, and vice versa for the market maker sell model. But this is the most important aspect. You have to know where price is relative to the higher time frame. So let's go open up a chart, and as we can see here, and let me zoom out a bit on the daily time frame. So as you can see here on the daily time frame, it is a textbook example of what we are seeing right here. As you can see, it's the exact same thing. Every single bullish sequential SMT that price formed as price was trending higher, we would anticipate to hold. And I have a very specific example of this, as we can see right here. So as we can see, going back specifically right here, replay mode, going back specifically to July 1st, what do we see? We see bearish sequential SMT at the highs. However, price forms bullish sequential SMT, and more specifically, we have weekly cycle sequential SMT at the highs and weekly cycle sequential SMT at the lows. However, the bullish one ends up playing out beyond the bearish one's high. Why is that? Why did the bullish one overwhelm the bearish one? simple. On the higher time frame, the daily time frame, we're very clearly here, back here, we're very clearly in a market maker buy model. As we have talked about, if you're watching this video right as I release it, we've talked about time and time again over the last few weeks, been over well over a month now, that we are in a dead clear market maker buy model. So all we are looking at right now, and more specifically, we're within the buy side of the curve of a market maker buy model, meaning every single bullish sequential Ssmt that forms, we should anticipate that to overrun the bearish sequential Ssmt. So that is the biggest, most important aspect to understand before you start utilizing this concept. So in summary, bias should not be built off sequential Ssmt cracks and correlations alone, but instead built off of and based off of overall market sentiment and overall higher time frame market structure. Now into time frame alignment. So we already talked about this in the time frame alignment video. However, we'll just quickly repeat it. Now, why do we use time frame alignment? The reason we use time frame alignment is because the PD rays that form after a certain given sequential Ssmt, those are going to be the ones that are going to hold strongest, and the types of PD rays that form after that, we are looking at trade based off of them. So let's just go back here, and if this was 90-minute sequential Ssmt, we would be identifying this on the 5-minute time frame, as we would see right here. Meaning, if we see and these are going to be concepts you're going to learn later on, if we see a 5-minute PSP, a 5-minute PRC, a 5-minute swing divergence, a 5-minute SMTF, those are going to be the ones that are more than likely going to hold and more than likely give us a trade. Compared to a 50-minute PD ray, a 1-minute PD ray, we have to go from 90-minute to 5-minute to 1 minute. We can't jump from 90 minutes to 1 minute immediately. There has to be some sort of middle ground, and that middle ground is the 5-minute time frame. So in review, yearly cycle, daily chart, quarterly cycle, 6-hour chart, and some people argue that you can actually use a daily chart as well for this. And for the yearly cycle, you can argue the weekly time frame as well. And that's going to be based off of your own data collection. I personally focus on the monthly cycle and below anyways. So monthly cycle, 4-hour chart, weekly cycle, 1-hour chart, daily cycle, 15-minute chart. And when I say all this, weekly cycle, that's referring to weekly cycle sequential Ssmt. Anyways, 90-minute, 5-minute, microcycle, 1 minute. Again, some people argue that the microcycle, we could drop down right to a 15-second. However, for me personally, because you guys are learning from me if you're watching this video, personally, in order to validate a 15-second, well, I have a video on that you're going to watch later on in the series on how I personally validate a 15-second time frame. So be ready for that. As of now, I would suggest staying away from the 15-second until you do watch that video and you do actually understand the concept. Now, the example I'm going to show today is going to be a trade review from a trade I had taken recently, or somewhat recently. Anyways, how we would utilize sequential Ssmt. So as we just talked about, higher time frame is extremely bullish, and when this trade had taken place back in June, in late June, we were clearly expanding past the second stage distribution of our market maker buy model. As we have discussed time and time again, we were expanding past the second stage distribution back over here. So overall, going into each week, into each month from that point, and almost into every single day, obviously there's some specifics we have to consider, but overall, almost every single day, we are looking for some sort of long setup to present itself. So that trade specifically, if we understand that that higher time frame narrative is extremely bullish, then we are overall going to be looking for some sort of long setup. To support that, as we can see overnight, we form daily cycle sequential Ssmt as NQ and ES both run out the Q2 low during Q3 right here, while YM puts in a failure swing. From there, and that was around 6-7 a.m. At that point on, we displaced higher, 15-minute CISD, and from there, leading up to New York Open, which is where my model wraps around, we had then retraced back into discount, reacted off this 15-minute order block. So directly going into New York Open, we were looking for some sort of lower time frame cracking correlation. And even before that, we do have to have a clear drawn liquidity. So if you go back to like this candlestick right here that my mouse is hovered over, not a single indice, which was around here, not a single indice had ran out the daily cycle Q2 high. So that gave us a clear drawn liquidity. In the most simple aspect, we had SMT to lows and no SMT to highs. So immediately, even if we were going to be bearish on that day, which we were not, or which we did end up being. Even if we were going to be bearish on this day, we'd first have to run out this high and form bearish sequential SMT. We did that later on, but not going to get into that in this video. All we're focused on is my model around 9:30, and that's exactly what I played out. So as I've listed here, daily cycle sequential SMT at low day to support a bullish narrative. Going into market open, no bearish sequential SMT had formed, retracing the discount, 15-minute order block. This order block is high probability due to the sequential SMT attached to it. From there, going into market open, we identify some sort of lower time frame sequential SMT, lower time frame cracking correlation, and as you can see, 9:30 opened up. What do? Immediately manipulate lower, specifically to the previous microcycle low. So as you can see, during Q2, at the end of Q2, we run out the Q1 low. On NQ, on ES, on YM, we both fail to. That gives us our low time frame sequential SMT. So this is what we call two-stage sequential SMT, where we have daily cycle as a higher time frame sequential SMT and microcycle as a low time frame sequential SMT. We can have up to a 3-stage, even a 4-stage. So a 3-stage would look something like weekly cycle, daily cycle, 90-minute, and 4-stage would look like weekly cycle, daily cycle, 90-minute, and microcycle. This time we only had 2-stage sequential SMT to support this, which can still be high probability, but the more stages of sequential SMT we have, the higher probability that the trade will be. But anyways, we had a higher time frame and lower time frame sequential SMT, and like I talked about earlier, I explained in the validating a 15-second time frame video on how we validate a 15-second time frame. And the most simple aspect, a concept that you'll learn later, is called a swing divergence. We had that here at the low when we formed microcycle sequential SMT, and that validated me to drop down to a 15-second. And at that point, I entered out the next 15-second CISD. That was my entry, and then I targeted the daily cycle Q2 high, and that is it. So hopefully you guys enjoyed this lesson. Again, this is simply a introduction to the concept. You guys are overall going to understand how we implement it day in, day out, which ones we can consider valid by 1, studying my pre-market analysis, 2, studying my chart reviews, my daily recaps, and my trade reviews. If there's any questions, feel free to ask in the questions channel, the questions forums, or attend the live calls and ask your questions in there. But I'll see you guys all in the next video on hidden sequential SMT.